Welcome. Today's topic is on Amazon laws. As you know, my name is Roman Basie. I'm an attorney and CPA, and I practice in the area of tax planning and tax preparation and business succession planning as well. When we look at what we call the Amazon laws, what we're going to be looking at today is the different sales tax laws across the country and how they're applying to Amazon as an online retailer and how they're going to apply to all online retailers in the future. As you'll see, the states are varying with their treatment of Amazon across the country. And I'm sure you as tax return preparers are starting to see the effects in some of the tax returns that you're helping assist with. Now, while I know we're here to talk about the federal tax return preparation, this has such a significant impact, we felt that it was an important topic to bring to you today. So let's take a look now. I'm on slide 2. And again, here's as an introduction, we're all familiar somewhat with the sales tax laws across the country. We know we have state sales tax laws, and we know that we have local sales tax laws. And sales taxes are collected at the point of sale on goods that we purchase. And this is extremely important. These are what we call trust fund taxes, and you hear that terminology when you're helping your clients across the country maybe do their payroll taxes or do their excise taxes. And we'll talk about those taxes in other presentations and other updates in the program. But when we talk about what's a trust fund tax, it's a tax that's collected at the point of sale or the point of the wage being given. And the employer has to hold that tax in trust and then submit it to the state or federal government. They're so important because as an attorney and as a CPA, and I represent a lot of companies across the country, it is one of the top problems that I see in small businesses all over when they fail to remit the trust fund tax. So it becomes extremely important that we understand the Amazon tax laws and how they apply to sales taxes if you have clients that are doing business across the country. And don't we all? I have so many clients these days that come in and they say, well, Roman, I'm in Connecticut, but I'm selling goods on a regular basis to Florida. What are my legal ramifications? What are my tax ramifications? Do I have to be registered in that state? Do I have to pay sales tax in that state? So let's take a look at today's analysis, and then hopefully that will help you apply it to your analysis as you help with tax returns. I'll give you an example, too, of how important that these trust fund taxes are. So I have a client recently that owns a tanning salon, and they failed to pay in their excise tax, the 720 excise tax. They failed to charge their clients the excise tax. They failed to submit it to the federal government. It was a 100% penalty applied to them. So when they failed to submit the tax, they not only had about a $40,000 tax bill, they had an additional $40,000 to $50,000 in penalties and interest. I also had a company out in New Jersey, a pressure washing company, come to me and say, Roman, I didn't realize I had to withhold taxes on my employees and pay them over to the federal government. We all know that as 941 trust fund taxes. So again, we're seeing how important these things can be and how the shareholders of the companies that you're helping prepare tax returns for can be held personally liable for these type of taxes if they're not submitted. And as you'll see in today's presentation, how Amazon got behind the 8 ball with a lot of these taxes, then eventually had to settle up, make a decision, and move forward from there. And you'll see that as we talk about the different states. So as we talk about sales taxes, look at some of the examples that we have. Of course, purchasing of fast food, purchasing of groceries. And keep in mind, sales tax rates differ, don't they? Sometimes we have a different rate on groceries that we have on cars, that we may have on fast food. Some of those local rates and state rates can vary. Purchasing of consumer goods. This is exactly what we're going to talk about today. Walmart, Cabela's. Now, those are, for the most part, physical addresses. But sometimes they won't be that way. And look, the state tax is usually between 3% of the purchase all the way up to 9.5% of the purchase. Okay, so let's take a look at a little bit of the background on the sales tax laws and how they apply to Amazon. So it used to be very easy, as most sales taxes back in the day were at the point of sale. Your customer walked into a hardware store, they bought a hammer, they paid $1 of sales tax on the hammer, that dollar was withheld by the cash register employee, and then that dollar is submitted to the state. It's not that way. Then it started to change. Catalogs came out. We had Quill. We now have Cabela's. What about, we used to have Sears catalog. We used to have JCPenney catalogs. Then all of a sudden, the sales taxes were not being collected at the point of sale. What was happening? We were ordering goods from catalogs. We were paying the bill at some point in time, maybe 30 days later. Maybe it was put on layaway and it was paid in sections. So the employer was collecting the tax over time and then having to submit it to the state. So we started to see some of the delay in the sales tax collection. And then in 1992, we had a court case come about, Quill versus North Dakota. And this is really where it started to hit, where the state of North Dakota tried to force the sales tax on Quill, being what we call now an online retailer. And the court came in and said, look, there's no physical, Quill had no physical presence in North Dakota at the time. They had no sales force in North Dakota at the time. But what they did have, and what North Dakota was trying to pin on Quill, was that they had a computer software that their customers in North Dakota were using. And what was funny is that the computer software consisted of floppy disks, and those floppy disks were located in North Dakota. And that's why the case came about, because North Dakota came in and said, well, you don't have a physical presence here, you don't have a sales force here, but you have this software that's located in our state, and you have these old school floppy disks that are here. Maybe some of you today listening don't even know what a floppy disk is. But the presence of those disks in the state of Florida, or state of North Dakota, triggered the state to try to tax Quill. But the Supreme Court struck that down, and they said you have to have a physical nexus to the state in which you're being taxed in order to be taxed in that state. But the court said something very important. In Quill versus North Dakota, the court said, Congress can overrule us. We will allow Congress to write a law that overrules this decision. So even though we're requiring a physical nexus, we will allow it to be overridden. So what happened next? Gosh, the internet became popular. Think about the early 90s and how it transgressed to the late 90s and what happened to the internet. And then, of course, Amazon was established. Look, July 5th, 1994. So we started to see this progression. We've got taxes at the point of sale. Now we've got catalogs that came out. Now we have Quill and the North Dakota decision. Then we had Amazon, and Amazon changed the game as it relates to this topic. Little background on Amazon. I'm on slide 4. Of course, formed by Jeff Bezos, the CEO and founder of Amazon. Amazon began back in 1904 as a bookseller, and to this day, a very prominent online bookseller, as we all know. Currently, the largest online retailer that we have, look at their market capitalization, $407.8 billion. Look at the size of Amazon in relationship to Walmart and McDonald's. This becomes important when we talk about the sales tax revenue that's generated by Amazon, and the sales tax revenue that was generated from 1994 until now. Here we sit in the year 2018 for the 2017 filing season, and look at the market capitalizations of where we're at now, and think about all the sales tax that may have been generated and not paid in, or is now being generated and was paid in. Okay, so let's take a little bit of a look at the background of the tax information itself. So first, we had the Internet Tax Freedom Act. It did not bar sales on taxes, but it did tax other things on the internet. And this was passed in 1998. It did not bar sales taxes, but it looked at things and said, okay, there's going to be other things on the internet that we're going to allow, such as bit, bandwidth, email. To this day, those are not taxed. Now, what we've seen is the providers do different things with those, maybe offering higher speeds at better prices, getting around a sort of a taxation issue. But to this day, we still have bit, bandwidth, and email that are not taxed. The act was made permanent, actually on February 24th of 2016 under the Trade Facilitation and Trade Enforcement Act. So if anyone's interested in taking a look at where did we get to with sales tax on the internet and what can we tax, take a look at the Trade Facilitation and Trade Enforcement Act. But what it did is it said states are at a liberty to tax internet sales. They can do what they want as it relates to sales on the internet. Hence, look, the Amazon laws. And they have survived these laws that you're going to see today, these different treatments by the different states, have survived the Supreme Court scrutiny. Okay, so let's take a look now as we start to begin our state analysis. And when I go through these states, if you're helping your clients prepare tax returns in different states, kind of take a look at what states you're preparing tax returns in, and you can start to keyhole each one of your clients into those states. Several states have not passed a version of this tax, as you'll see. Currently, Amazon collects from 41 states. Now, it wasn't that way even this year. Even in 2017, 2018, we still have some states that are just now becoming effective, a part of this 41. And the 41 that we're going to talk about, and the District of Columbia, but we have Alabama, Arizona, Arkansas, California, Colorado, Connecticut, Florida, Georgia, Illinois, Indiana, Iowa, Kansas, Kentucky, Louisiana is one as well, Maryland, Massachusetts, Michigan, Minnesota, Mississippi, Missouri, Nebraska, Nevada, New Jersey, New York, North Carolina, North Dakota, of course, that's the one that we started with, Ohio, Oklahoma, Pennsylvania, Rhode Island, South Carolina, South Dakota, Tennessee, Texas, Utah, Vermont, Virginia, Washington, West Virginia, Wisconsin, and Wyoming. Now, New Mexico, they just started April 1st of 2017. They started collecting tax in that state. So if I read off a state where you're helping prepare tax returns for, be aware if you're dealing with a company that is selling online or you're dealing with a small business that is selling online, there are certain thresholds in those states, as you'll see today. There are certain tax rates that they've applied to Amazon. The question will be whether your clients need to be filing their sales taxes as well in those states, whether they need to be charging their clients those taxes as well, and whether or not the thresholds apply to them as well. And be careful, because the different tax rates apply to Amazon because of how large they are. They may or may not apply to your client. And if your client is an Amazon affiliate, you'll see that word being used a lot today, then you have to say, okay, am I being treated differently because my client that I'm preparing this tax return for is an Amazon affiliate? And what is the agreement that state has with Amazon as it relates to this? And this is important because if Amazon must collect sales taxes, there is a possibility on whether other state transactions are subject to the state sales tax. Now look at this. We're on slide 7. Amazon does not collect for Hawaii, Idaho, and Maine, and there are no state sales taxes in Alaska, Delaware, Montana, New Hampshire, and Oregon. And following is the analysis now of the rules specific to Amazon and its other retailers. So let's take a look, and let's start here on slide 8, and I'm going to start with Alabama. So online buyers, as of November 1st, 2016, online buyers started paying state sales tax in Alabama as Amazon agreed to participate in Alabama's simplified use tax remittance program. So if you're working with a client in the state of Alabama, they have a tax program. You need to take a look at that particular tax program. The measure allowed eligible online retailers to pay a flat 8% tax, as opposed to keeping up with the variances among the state and local taxes. The simplified rate is allowed to retailers that sell services or items in the state but do not have a physical presence there. The law also allows them to lock in the 8% rate even if the federal government adopts a higher figure in the future. Alabama, we started alphabetically, but I love starting here because look what they did. First of all, they made an 8% flat rate. How many of our states have a flat sales tax? Hardly any of them. Most of them have different rates depending upon the different good that's being purchased. So already, and we're going to see this because other states did this prior to November 1st of 16. There are also some other requirements listed under that Alabama statute, and I listed 2 of them there, that they have to have had $250,000 in sales or more, and that requirement is listed under the statute and under the program in Alabama. So again, I can't stress it enough as we go through this. Look at the state, look at what the law is, look at what they've done with the Amazon law, and then apply that to your client. Take a look at Arizona. And I mentioned earlier how much in sales tax revenue was lost since 1994. Look at Arizona. On October 26th of 2012, Amazon reached an agreement with the Arizona Department of Revenue to pay $53 million to settle unpaid taxes. Now, you tell me, did they lose more than $53 million since 1994? Absolutely. So it ended up being a very small settlement in my mind for Arizona. Furthermore, Amazon agreed in 2013 to begin collecting sales taxes for goods sold to Amazon. And they agreed to collect the 6.6% tax rate and not collect the local tax rate. So now what you're going to start to see is some states, as we saw in Alabama, they passed a flat 8%. Now we see in Arizona it was 6.6%. So you've got to know if you're helping prepare tax returns across the country or for clients in states where you're in or other states, what's the rate they applied to the online retailer and does it apply to your client? Here they're not collecting a local sales tax. You're going to see that through most of the states where they don't collect the local ones. And how much are the local governments losing now? And are we going to see local governments come in and start asking for sales tax to be withheld and collected on online transactions? You can bet you will start seeing that in the future. Section 425159 of Arizona's sales tax statute lays out in detail many of these exemptions for others other than Amazon. So if you're in Arizona and you want to see what the exemptions may be, take a look at that statute. Arkansas. The point I wanted to make here was that in 2011, they started requiring Amazon to collect sales taxes, and there is a threshold in Arkansas of sales over $10,000. Now look, most of our clients, if they're running a small business, they're going to have sales over $10,000. We've given this program for many years now, and I get phone calls and emails throughout the year from many of you, and most of those are usually related to the preparation of a tax return as it relates to a business that your client may have. Maybe a little home-based business, maybe a physical business. But that's why we wanted to help present things like this to show you the different thresholds that the states have as well. California is an interesting one because California in 2009, of course, we had Arnold Schwarzenegger was our governor. And if California tried to enforce the state sales tax on Amazon, and what Amazon did was they threatened to terminate 10,000 of their affiliates in California if the pending legislature that had been proposed during Schwarzenegger's time was passed. Now, Amazon has what we call affiliate. They had what we call affiliates all across the country. Many of them. And look, in California alone, back then they had 10,000. That number significantly grew as the years went by. In some states, they've terminated those affiliations. In other states, they've not because they've been able to settle. But in 2011, they threatened to terminate their affiliates, withhold commissions, and then they ended up doing it. And by the time they did it, they had 25,000 affiliates in the state of California that they cut off. But they ended up compromising. And what they did in the state of California was agree to a delay of 1 year before requiring online retailers to begin collecting sales tax on sales to California addresses. In return for the 1 year delay, Amazon created 10,000 full-time jobs, 25,000 seasonal jobs, invested $500 million in facilities over the next 4 years, and began remitting sales taxes on orders shipped to California. California began collecting the sales tax on September 15th, 2012, and the rate depended upon where the buyer was located. The caveat we have here is that that particular requirement may not apply to third-party sellers on Amazon. It's a little unclear still to this day whether that applies. But look, you've got a client selling to a customer in California with a California address. You've got to take a look at the California analysis and say, do I have to remit state sales tax because they have an address located in California? And remember, with Amazon, they're collecting the specific rate, state and local. You may have to be able to determine for your client what was that local tax rate. Gets really complicated, doesn't it? I hate, as I went through the presentation, even in preparing the materials, I couldn't believe the complications that we are creating with this whole set of laws, but they're out there. Colorado, they did the same thing. Look, in 2010, they terminated their affiliations. But again, they settled with the state of Colorado. They began collecting sales tax on February 1st, 2016. And there is a website that we've given you to go to take a look at the Colorado sales tax exceptions. So take a look at that one as well. In Connecticut, there's a threshold. As you see, it's $2,000 for out-of-state retailers in the state of Connecticut. In May of 2011, Connecticut passed legislation that required online retailers to collect the sales tax if they have a Connecticut-based affiliate. The legislation should have raised about $9.5 million per year for the state of Connecticut. Amazon agreed to collect state sales tax in the state of Connecticut at a rate of 6.35%. Connecticut does not have a local sales tax rate. So if you've got a client in that area, there's only a state rate there. And they also, and Amazon on a lot of these, our clients will not be doing this, but Amazon had agreed in that state to invest $50 million. There was always this give and take on the back taxes owed and the investment that would be made in the state. In the District of Columbia, they started in October of 2016. They started collecting 5.75% of the sales tax. Florida. There's a big statute in the state of Florida, and it really hinged on, it began with the chain borders is where the Florida statute really began. And effectively, Florida came in and said, look, Amazon, by not paying taxes, they're able to save 6%. And they are approximately a 6% better retailer than our stores on the ground in the state of Florida. So you have to take a look at the state of Florida as well to see what they are looking at doing as it relates to the Amazon laws and the statute that is in play at this time. Let's take a look now. I'm on slide 11, and we're still going through the states now as it relates to the Amazon laws in each state. And take a look at Georgia. Georgia passed a law that became effective January 1st, 2012, expanding the definition of what constituted a physical presence in the state in the hopes that it forces online retailers to begin collecting online taxes. Physical presence is the kicker, and that's the kicker from the Quill case. So once your client has a physical presence in a state, usually that's a location with a storefront. But look, the states are starting to change that definition of physical presence as we see box stores across the country closing up and going online. Amazon did not collect sales taxes until they agreed with the state of Georgia on September 1st, 2013 by way of a separate agreement. On January 9th, 2017, in the state of Hawaii, they had not passed legislation yet requiring Amazon or other retailers to collect a state sales tax, but they are currently considering a bill in the state of Hawaii. Hawaii is very important because, of course, the majority of transactions with the state of Hawaii are taking place online for people across the country. So it will be interesting to see how Hawaii crafts their statute that they're going to put in place. Amazon does not collect, still to this day, as of the date of production, does not collect sales tax in the state of Idaho. Okay, let's take a look at Illinois. And Illinois passed legislation to tax online sales made to consumers located in the state. So they're looking at if you're a consumer in the state. In fact, one of my base of operations is the state of Illinois. And for many years in Illinois, it was an honesty reporting. What did you buy online? Report your sales tax online. There was a study that came out, and the study said that approximately 1% of the people in the state of Illinois were paying the state sales tax on their online purchases when all of this came out. So in March of 11, then Governor Quinn signed an act called the Main Street Fairness Act, and they estimated the state of Illinois was losing $153 million in sales taxes per year because of this. But they made an agreement with Amazon. If they have sales of $10,000 or more in a prior year, then they have to start collecting sales tax. So if you have an online retailer and they're selling to the state of Illinois and that threshold is $10,000 in the prior year, then they may be subject to the collection of the state sales tax. Let's take a look at Indiana. Now, Indiana has a code 6-2.5.5. Indianapolis had a lawsuit in 2011 that was brought by a property group that wanted to force the state to collect from Amazon in an attempt to level the playing field in the state of Indiana. Amazon agreed January 1 of 2014 to go ahead and start collecting the state sales tax. They own 4 distribution centers in the state, or they did at the time of production of this, which satisfied the physical requirement, so they started picking it up in the state of Indiana. Okay, moving on. I'm on slide 13, and I'm looking now at the states of Iowa, Kansas, and Kentucky. Iowa is a relatively new one also. January 1st, 2017. Amazon began collecting 6% flat sales tax in Iowa. Amazon has no physical presence in Iowa. It is not compelled by law to collect any kind of state sales tax, and they will not collect the local portion of the sales tax. So what you're seeing, and Iowa is one of the first states in the list, where there's no physical presence, there's no nexus, yet they're still going to start collecting from the state of Iowa. It's very interesting. And they've came out and said they are not going to collect the local portion. So will we see the federal government come in and try to get a grip on this issue? Will we see the states that now don't have a physical presence with Amazon also try to get their piece of the pie, the few that are left out there? Again, we said there are 41 states they're collecting for, so there are a handful left. Take a look at Kansas. Amazon has collected sales tax in Kansas since at least 2005, even though it opened up a distribution center back in 1999, which satisfied the physical presence requirement, again, that requires you to collect sales tax. Kind of keep that in mind too. If you've got a company in a state and there's some neighboring states, take my area for example. I'm in Illinois. I'm down in the southern part of Illinois, so we're close to Kentucky, we're close to Indiana, we're close to Arkansas, and we're close to Tennessee. So it's very easy for one of our local clientele to be operating in those other states. Maybe they have a salesman living in another state that drives a company truck and is located in that state. There's a public act that we look at when we look at state analysis and we try to determine, should my company that I represent be filed in another state? Should they be paying taxes in the other state? And should they be registered with the Secretary of State in that state? So there's a public act that we follow and we look at Nexus, and it gives us all of these requirements as to what we should be following. Some of the things that you'll find would surprise you. One of the exemptions is, well, if you have someone going into another state to take a look at inventory and make sure that it's not spoiled. Let's use an example of a gas station in another state. If you have someone going over there to look at the soda or the chips or the product just to see what inventory is spoiled and what more inventory that they need, the Federal Public Act says that's not Nexus. You do not need to be registered in that state. But if you have a salesman going over there conducting business for that facility, then that is a Nexus, and you need to be registered for that state. That means you're going to be triggered to pay state sales tax and collect the state sales tax and things of that nature. So keep that in mind too. Okay, so take a look at Kentucky. Amazon has collected sales tax in Kentucky since 2005. However, as in Kansas, they've also maintained a distribution center in Kentucky since 1999. Okay, moving on. Taking a look now at slide 14, and we're looking at Louisiana. As of January 1st, 2017, Amazon began collecting taxes in the state of Louisiana. Louisiana citizens have one of the highest averaged combined sales tax rate in the nation. They now pay on average 9% in state and local sales and use tax for Amazon purchases. And that's why we said, look, it can range from 3.5% all the way to 9%. We see that in Louisiana. In Maryland, October 1st, 2014, they started collecting sales tax ahead of a planned distribution center that they were building. So whenever they come in and they know they're going to have a physical presence in that state in the near future, they start collecting sales tax. They don't want to get hit with the back tax now. So if you have a client that's planning on getting a location in a state where they're not currently in, no, they need to start collecting it even in advance of that location being created. Massachusetts, this started in November 1st of 2013. They began collecting the state 6.25% rate for Massachusetts residents only. It only applies to purchases made on Amazon and not to third-party sellers on Amazon. Taking a look at Michigan, there's an agreement in the state of Michigan. It was conducted on October 1st, 2015, and they have a state law. The state law has a $10,000 threshold, as we've seen before, and they also have a $50,000 threshold for gross receipts. So in Michigan, you need to take a look at the state law for your clients. Okay, moving on. I'm on slide 15. Let's take a look at Minnesota. On October 1st, 2014, Amazon started collecting sales tax in Minnesota. There is no state law compelling the collection of the tax in Minnesota. The decision came ahead of a planned distribution center in 2017, and there is also an agreement and a threshold in the state of Minnesota, even though we have no state law compelling the collection of the tax. In Mississippi, this is what was kind of the similar to Illinois, was that you have a notice requirement, which is the customer's responsibility. This is interesting. So on January 12th, 2017, the Mississippi Chief Tax Collector filed to require any company doing more than $250,000 of sales in Mississippi each year to collect the state 7% sales tax. Amazon has already begun collecting the tax in Mississippi as of February 1st, 2017, and at least 3 bills have been introduced into the state legislature to require remote retailers to pay the sales tax. Mississippi will allow the internet tax bill passed by the House committee on February 1st, 2017 in the state of Mississippi to die in the committee because they called it unconstitutional. So here you can see what Mississippi has done. Their chief tax collector is who required the collection of the tax, so a little bit different. In Missouri, there was some representatives that proposed what they called a streamlined sales tax project, but Missouri began collecting the sales tax anyway for Amazon February 1st, 2017, and in Missouri, they're only collecting the state rate, which is 4.225%. So keep that in mind for Missouri. Okay, so moving on, we're looking now at Nebraska, Nevada, and New Jersey, and I'm on slide 16. So they began collecting in Nebraska January 1st, 2017. Nebraska does not have a law requiring a sales tax if they do not have a physical presence. So Nebraska follows the Quill case, basically saying, look, you have to have a physical presence in the state. But again, Amazon started collecting the state sales tax anyway. And in Nevada, legislation would have required Amazon to collect the tax. It was expected to generate $16 million. However, they reached an agreement January 1st of 2014, and in Nevada, they do collect state and local taxes. And keep in mind, Nevada does not require, at this point in time, other online retailers without a physical presence to collect the state sales tax. So it's just by agreement in the state of Nevada. Let's take a look at New Jersey. They began collecting the tax July 1st, 2013. This was a result of opening up warehouses in the state of New Jersey. New Jersey has not passed a law that would require it unless there's a physical presence. So again, we see a threshold in Missouri on the agreement. There's an agreement, a $10,000 threshold, and no law outside of what? Physical presence. Take a look at New Mexico. On April 1st, 2017, Amazon will begin collecting sales tax in New Mexico. And New Mexico's revenue department said that just over 5% sales tax will be collected, with some going to the state's general fund and some going to the cities where the products are purchased. So what New Mexico is doing is trying to spread the wealth a little bit to the local communities that are losing out on the sales tax revenue. So you may see some of the states do what New Mexico did, where they say, look, we want a flat rate. Or you may see the federal government pass a bill that says it's a flat rate for online retailers. It's submitted to the states. Maybe even the federal government will take a piece. It's submitted to the states, and they're required to submit a local piece to the local communities where the products are purchased. Kind of interesting. And there's actually several bills under construction to reform New Mexico's tax laws and force other online retailers to collect the sales tax. And what they did in New Mexico by doing a flat 5%, when New Mexico's average combined rate is 7.51%, so New Mexico realized, while we like what we did, we have a flat rate, we're trickling down some of it to the local communities, they're still losing out. They're losing 2.5% on every transaction that's taking place with Amazon. So you're going to see something happen there because these deals they've created are less than the state-passed state sales tax rates. And again, keep in mind, remember, Quill told Congress, you can override us. The Supreme Court said you can override this decision. This would be the reason why they would override that decision. Okay, I'm on slide 17. We're going to look at New York, North Carolina, and North Dakota. And in New York, there have been several lawsuits. But what's key to point out here is that in 2008, they passed a law in the state of New York that would force online retailers to collect sales tax on shipments to state residents. And shortly after that law was signed, in came the lawsuits, one of them from Amazon. But in early 2017, the current governor of New York has proposed that sales tax collection be applied to Amazon's marketplace operations. Now, if any of you follow New York litigation, we see a lot of online litigation start in the state of New York. We saw that with fantasy football and fantasy drafts and things of that nature. All of that litigation kicked off in the state of New York. We're seeing that again as it relates to these Amazon tax laws in the state of New York and how they're going to approach them. Take a look at North Carolina. In North Carolina, Amazon did not collect from North Carolina. However, starting February 1st of 2014, they did. There is a threshold and there is an agreement with North Carolina. North Dakota has a physical presence requirement. The fulfillment center was closed, but yet they still collect from the state of North Dakota. In fact, that fulfillment center was closed in 2005, yet Amazon continues to collect to this day. Okay, starting to get to the second half of the states and wind it down, take a look at Ohio. So Ohio, June 1st of 2015, they began collecting sales tax in the state of Ohio due to new data centers that were being built. This satisfied the requirement of physical presence. And in Oklahoma, in February 2nd of 2017, they would begin collecting sales tax on online purchases. Oklahoma passed a law called the Oklahoma Retail Protection Act. Under the act, retailers are responsible for collecting and remitting the state and local taxes or notifying their customers of the responsibility. So what you need to do in Oklahoma, either your clients need to collect it and pay it, or there is a requirement that they give notice to their customers that they have to collect it or that they have to pay it in themselves. And sometimes those notices, you have to be careful. If you're operating in the state of Oklahoma or you have a business operating in the state of Oklahoma, if that's being reported on that customer and you're representing a customer doing their tax return, did they buy something from Amazon online? Are they in Oklahoma? Did they not pay sales tax to the online retailer? Then they need to pay it into the state of Oklahoma, especially if it's been reported, or else they're going to be audited from the state. The same thing as getting a 1099 and not reporting it. The federal government has a copy of the reporting. Your client doesn't report it. It's an automatic letter audit for your client. Okay, moving on. Slide 19. Take a look at Pennsylvania. So Pennsylvania, the Department of Revenue released a sales tax bulletin on December 1st of 2011 outlining their interpretation of the Tax Reform Code of 1971. So that they said they would give a one-time extension up until October 1st of 2012 of collecting the sales tax. Amazon began collecting the sales tax in the state beginning on that extension deadline, and they only collect 6% state tax in Pennsylvania. They do not collect any type of a local tax. Take a look at Rhode Island. February 1st of 2017, they began voluntarily collecting the state sales tax of 7%. But back in 2009, Rhode Island had passed a law which forced Amazon to collect if it had affiliates in the state. So if you have any type of a small connection to the state of Rhode Island, there's a 2009 law out there that requires your client to collect the sales tax. Let's take a look at South Carolina. So in South Carolina, I'm on slide 20, they had a distribution center, and South Carolina passed legislation that required internet retailers to start collecting sales tax in 2016. So if you've got someone as of January 1st, 2016, in the state of South Carolina, you need to pay particular attention. Have they collected sales tax, as that applies to online retailers for that state? South Dakota, February 1st, 2017, Amazon began collecting because there was legislation passed in 2016 that required retailers to remit sales tax even if they did not have a physical presence in the state of South Dakota. So South Dakota has jumped on board with the non-physical presence requirement. So you got to pay. Those states are the ones to pay most particular attention to. If you look at today's presentation and you just flip through some of the states, the ones that say to you, no physical presence, we don't care, we still want to collect sales tax in those states, those are the ones you have to pay particular attention for your clients, the ones that own businesses, and for the ones that have bought something online that have not remitted a sales tax to someone. Because even if Amazon comes back and says, okay, they've sued us, we've agreed to pay sales tax, you owe us sales tax on the purchase, you're going to see things change on tax returns. Take a look at Tennessee. So Tennessee, January 1st, 2014, they began collecting sales tax after a 2-year delay from the Tennessee governor who had signed an online sales tax bill back in 2012. So in Tennessee, you have a 2012 law, and there is a threshold of $10,000 in the law as well. So take a look at that. In Texas, they have a long, storied, detailed history. In fact, my notes for Texas spanned about 3 pages, but effectively, July 1st of 2012, they finally began collecting the tax at 6.25% in the state of Texas. Couple states to finish up here. Utah, in December of 2016, they struck a deal with the state of Utah, and so they began in 2017. What's interesting about Utah is they kept that deal confidential. So most other states have disclosed the agreement that they made with Amazon. Utah did not. We have no details on the Utah agreement. In Vermont, as of February 1, 2017, they're collecting 6%. And in Virginia, as of September 2013, Amazon is starting to pay in. But look what they said. In Virginia, they said others must have a nexus to be taxable. So their threshold is considerably much larger. They're saying to you, Amazon is Amazon, and we're going to collect from Amazon. All you other small businesses out here, unless you have a connection in the state, a physical presence of some type in the state, we're not going to require you to collect the sales tax. Taking a look at West Virginia, in December of 2013, actually a little bit before that though, they began collecting sales tax in West Virginia, but they passed a law requiring out-of-state retailers to apply sales tax if they or any subsidiary of those have a physical presence in the state. I represent a client in the state of South Carolina. They have 19 distribution centers throughout the U.S. Now, it's a larger clientele than we deal with on an everyday basis. But under the state analysis in West Virginia, when those distribution centers sell the product to the retail services, there may be a trigger of tax if they're not selling that product in the state of West Virginia because they're connected to the state of West Virginia, and that is the point of the first sale. So you have to be careful with some of these other types of products that we're dealing with. Look at Wisconsin. They began collecting sales tax in Wisconsin on November 1st, 2013. About a year before Amazon opened its Kenosha distribution center, they will only be collecting 5% in Wisconsin, and Wisconsin has not passed an Amazon law. So in other words, you've got to have a physical presence in the state of Wisconsin. In Wyoming, starting on March 1st of 17, they voluntarily agreed to begin collecting the sales tax in Wyoming. But Wyoming also passed a bill requiring anyone that does more than 200 transactions per year or over 100,000 in sales in Wyoming must pay the state sales tax. Now, how many of your clients that do have a small business, if they're selling online, if you're close to Wyoming, are you doing more than 200 transactions per year? You're triggered, and you have to pay the state sales tax in accordance with the law in the state of Wyoming. So look, there were many strategies that they started to employ based on all this different conglomeration of state taxes. We saw this strategy of affiliates, Amazon coming in and saying, we're going to terminate our affiliates. We've got 10,000 here. We've got 25,000 here. We're not going to use them at all unless you make an agreement with us. They threatened to cut ties with them. That was a very effective strategy. So what it tells us as looking at businesses that are growing and looking at your clients that are trying to build their businesses from the ground up is Work with the states. If your client has not been collecting sales tax and you contact the state and the state says, yes, we feel like you should be collecting sales tax, work with them. They're very open to working out these types of arrangement. We also see a technique being used, and Amazon is using this technique. They're creating subsidiaries that are treated separately for tax matters. It's called entity isolation. We use the example of Kindle. The subsidiary that developed Kindle is in California, but because it doesn't sell the Kindle directly to customers, the legal position that Amazon is taking right now is that it's not required to collect sales tax in California. So we'll see how that changes because they're telling California, no, Kindle is not selling directly. We're not going to pay sales taxes on the subsidiaries' purchases and sales. In conclusion, looking at all of these Amazon laws and how they relate to the states, it's important that a determination is thorough and it must be made for your clients of whether they owe a sales tax in a specific state that they ship to. More states are beginning to tax out-of-state sales, so a complete analysis has to be done. So if you're dealing with a client that sells online, or you're dealing with a client that has made a lot of purchases online, and how many of us have those types of clients, that's when you have to make this determination to see, are they completing their tax returns properly? Are your clients doing the proper withholdings and submitting it to the states on time and appropriately? Because again, I go back to the very beginning and I tell you, look, any type of trust fund tax like this is one of the most damaging taxes that we see to small businesses across the U.S. It's the number one problem that I see in my firm when a client calls me and says, I've got a tax problem, I have a small business, and I've got a tax problem. 99% of the time, it's a trust fund tax problem. So think of that as well. There's some of my contact information for this part of the presentation. If you have any questions, feel free to contact me, and we will get you an answer as quickly as possible. Thank you.